all the way from Chicago. I want you to be in a good mood, not to always talk negative. There are a couple of stocks you're bullish on. I was surprised. Despite your pessimistic forecast, you think U.S. Steel is a pick. Why?
Yeah, you know, first of all, the chart looks great. The stock bounced off of 1650 a few months ago and now is trading north of 21. But seasonally adjusted, the stock likes to move up. It's a great fourth quarter stock to own anyways. If you go back in history and you look at the fourth quarter, it typically runs. So the chart's breaking out, plus the seasonality of the trade looks good to me, and I'd be not ashamed to own it.
Well, what fascinates me, Todd, about your picks is where you gave us that as a long, you're long those names, but Goldman Sachs, you would say short Goldman Sachs?
Yeah, I think Goldman Sachs has been a short. I don't think it's going to see north of 170. First of all, the banks have been extremely the weakest sector throughout this entire rally. The only bank that's done it all here is Wells Fargo. Everything else is at least 40% from their all-time high in a market that is very near all-time highs. The banks need higher interest rates to make better use of their capital now, and because of what they've gone, it looks like a short. I'm a seller of Goldman Sachs below 165.
Joe, we want to throw you a kudo. Last time you were here, you said Best Buy. Best Buy's up about 20%, by the way. Consumer discretionaries are still a buy, even though I don't know if you heard the news about Walmart, but they think their inventory is growing too big. They're cutting back on their supplies.
Yeah, there was some news out earlier. Walmart kind of fought back there and said that it wasn't as bad as perhaps the report said. I'm not a big fan of Walmart in general. I think the price action's not too good, but they've really lagged the XRT and the S&P 500 overall. I think there's some better names within that group. You look at Green Mountain Coffee Roasters, even Chipotle, or GameStop. Those are some names I like, but XRT in general, I think there's a lot of doubt surrounding that sector. It's continued to sort of climb that wall of worry. The consumer is doing better than perhaps many expected during the past couple of years, and those are names I like, yes.
Dan Stecich, let's bring it back to you, because in the end, all of these names that we've mentioned involve a consumer who's a little bit more vibrant, perhaps, or we need them to be vibrant to participate in a Green Mountain Coffee Roaster or, well, he's shorting Goldman, but to go long Goldman Sachs. What do you think? I mean, do you look at the market as running in place, or do you feel that the data haven't been that bad, and therefore that's enough to build a floor under everything?
Well, I think both. It has been running in place, and there is a floor on the market. And in terms of consumer stocks, I think one that probably should be looked at is Ford. If you look at the durable goods number, one portion that was really did well was the auto component. Now, those are stocks that take a lot of confidence to go out and make the commitment to buy a $20,000 or $30,000 car. So I do think it will crawl out. But until Washington gets their act together, and I tell you, until they start acting like adults, these children are going to keep this market under pressure.
Hey, Todd, and perhaps Dan wants to chime in on this as well. Let's talk about oil for a second, because oil supplies are increasing, and I'm wondering why, because I know that China is actually increasing its imports of oil. But why is oil supply increasing? Is it because we're able to produce more, or what's going on there, Todd?
I think we're producing more, and we're having a lack of demand here. You know, we're trying to switch over, and we've had, you know, we're past.
But where's the lack of demand? Because China's importing more.
Right. But in our own country, we're still net exporters of oil here, so we're having less of a demand here for our own oil, and we're now able to ship it out to other places. So there's still plenty of oil. There's still plenty of WTI. The only problem in oil is in Brent.
We got to give Joe props, because 2 weeks ago, Joe was on the show and he picked a name that matters to, again, back to the consumer, Best Buy. You said buy Best Buy. Since you mentioned it, it's up 20%. People are going to make 20% on just that recommendation. Why do you think that is? What's going on at Best Buy, and do you still like it? Would you add to your position here?
Well, it was all about the earnings report. It came out, like I mentioned before, the market's all about expectations. That bar for Best Buy was set so low it didn't take much to beat it, so they had a strong earnings report. You saw a gap up on that. And then really just that momentum continued, the trends in place. Right now, perhaps, if you're looking to buy right now, right here, perhaps a little bit of a consolidation or pullback would provide a better entry point, but bigger picture, yeah, I still think that uptrend remains in place.
By the way, I think we have a battle here, because if I'm not mistaken, Joe, you're in favor of bonds. You think bonds have been beaten down to the point where maybe a buy-in is not a bad idea, and I would suspect that Todd thinks that's a terrible idea. First to you, Joe, is that true? Are you thinking maybe it's time to go into bonds?
I think so. It's an interesting trade there. It's a little bit high-risk, high-reward trade. If you look at bonds, it's purely the sentiment. It is at extreme lows of bearishness. There was an interesting poll out where they asked investment managers.
By the way, excuse me, we're looking at yields. When yields are up, obviously bonds are down. So that's why he's saying they've been beaten down. Go ahead.
Correct. When they asked investment managers 12 months out, do you expect higher rates, and 97% of them do expect higher rates, which, of course, like you mentioned, would be lower bond prices. So an extreme amount of bearishness on that. We've seen some short-term technical strength. Could be a case where the masses have become so bearish on that asset class that we see a bit of a short-term bounce here in the next couple of months.
Todd thinks the bear has a lot more roaring to do on bonds, right? Very quickly, Todd.
I think the bears are going to take charge here, and they're going to push bonds down and yields higher.
Joe Bell, Todd Horwitz, and Dan Stecich. Good to see all of you. Thank you so much for playing in.
Great.